All right, let's dive right into this. There's a market analysis making some serious waves online, and its core claim is pretty explosive. The idea is that all this wild price action we're seeing, it isn't just random noise. It's a trap. And today, we're going to dissect that exact argument piece by piece. So the analysis kicks off with a bombshell: manipulation confirmed. The claim is that it's undeniable. While the public is being hit with messages to panic sell, the theory goes that Wall Street is secretly pinning the price to wreck retail traders. And they even claim to know exactly where the market's being pushed next. So the first pillar of this whole argument is this idea of a coordinated attack. We're being told that what we've seen in the markets lately is anything but random. Here's the core idea. The moment the US market opens, there's been, according to the source, heavy manipulation. And what's the goal? To hunt stop losses. You know, those automatic sell orders you set to protect yourself. The claim is they're being deliberately targeted to force you out of your positions, basically to clear the board right before something big happens. And for proof, the analysis points to the last 48 hours. Yesterday, a reported $74 million in longs, people betting the price would go up, got completely wiped out. Then today, they supposedly flipped the script and wrecked the shorts, the people betting it would go down. This whiplash action is being presented as the smoking gun of a deliberate strategy. Okay, so if this is a coordinated attack, what's the weapon? Well, according to this analysis, it all comes down to one specific, recurring event, something called quarterly witching. Now, for anyone who hasn't heard of this, quarterly witching is a totally real thing. It happens 4 times a year when a whole mess of futures and options contracts expire on the exact same day. It almost always leads to a huge spike in trading and volatility. The source we're looking at even calls it the most manipulated day of the entire year. And here's the kicker. Not all of these witching events are the same. The source really hammers this point home, that the December expiry, which is happening tomorrow, is the biggest one of them all. You've got stock index futures, stock index options, and individual stock options all expiring at the same time. It's what they're calling a perfect storm. So with the weapon identified, the analysis moves on to the target. I mean, if this is a planned attack, it has to have an objective, right? Well, the source claims they've pinpointed the exact price they're aiming for. So, what's the magic number? Based on their reading of liquidation heat maps, which basically show where a ton of automatic sell orders are stacked up, they've identified a very, very specific target. And there it is, $85,500. According to this analysis, the heat maps show a massive wall of money, a huge cluster of liquidations sitting right at that level. That makes it the perfect target to push the price towards to trigger a massive cascade. So this breaks down the whole warning into 3 pretty clear steps. Step 1, the trap. Push the price down to that 85.5 level. Step 2, the pattern. They point out that historically, the market tends to dump for a few days right around this event. And step 3, the final warning, if that level breaks, the big institutions can swoop in and scoop up assets for cheap. Okay, so we've got the what, the how, and the where of this theory. But that leaves the big question, why? Why would this all be happening right now? According to the source, the answer just came out of Washington, D.C. This timeline really tries to connect the dots. You've got the market dump, you've got the witching event tomorrow, and, what a coincidence, you have a newly confirmed delay on major crypto laws. The source is arguing these things are absolutely linked. So here's the deal. The U.S. Senate just officially punted 2 huge bills, the Clarity Act and the Market Structure Bill, all the way to January 2026. The source notes that Senator John Kennedy confirmed it, and the official excuse is that they're still arguing over things like DeFi and stablecoins. And here is the source's direct take on that news. They're calling this delay a gift to the banks. The whole idea is that it creates this little window of regulatory fog, giving the big players one last chance to accumulate assets before new, clearer rules come in and potentially change the whole game. Now, the next part of the argument contrasts the public story of fear and panic with what the source claims is really happening behind closed doors. They say, if you just follow the money, a totally different picture emerges. So this lays it out perfectly. You've got 2 competing stories. On the one hand, the public narrative is, the market is dead, panic. But on the other hand, the source alleges that the so-called insiders are doing the exact opposite. They're using this as a buying opportunity. And as evidence, they point to these ETF inflow numbers, which can be a good sign of what big money is doing. For XRP ETFs, they're reporting over $1 billion in net inflows in just the last 30 days, with apparently every single day being positive. For Solana, it's over $63 million in just this week. The argument is simple. While you're being told to sell, the big players are buying. And finally, the analysis pulls all these threads together into what it calls the endgame. The claim is that all of this, the manipulation, the delays, the quiet buying, it's all setting the stage for a massive shift in the market. And the last pieces of evidence they cite are these huge infrastructure moves. You have Binance getting its first ever global license in Abu Dhabi, which is a massive regulatory step. And at the same time, you have Coinbase launching its everything exchange to merge stock and crypto trading. The pieces, as the source says, are being put on the board. Which brings us to the source's final, pretty provocative conclusion. It frames this whole period as one last big accumulation phase before new regulations lock things down. The warning is a direct message to the viewer, basically saying this manipulation will only stop when the big institutions have bought up everything they want. It's a powerful theory, and it definitely leaves you with a lot to think about.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.